my time, you are I want. Neither of us want.
Okay, g'day, Rudy here. Just having a look at the S&P 500 on a monthly chart, or really it's the IVV ETF here in Australia. You know, anyone who's said to buy IVV over the last, well, really, since 2016, you've been right. Look at that. There's, 1, 2, little correction, 3, 4, big waves. But it's losing its stance at the moment. My view is we're in for one of these. See, we broke the channel. That candle there looks a lot like that candle there, doesn't it? If we just bring it back to a weekly chart. Okay, you can see that's a clear break of the uptrend channel. So I reckon it's not too late to get out. I reckon we're going to have a 4% bounce. So from here, we'll go up and look at 6,000 because the market likes round numbers. And then after that, we fall over. So stay tuned for future videos once, because there will be a rebound. It's natural in a bear market. You have rallies in bear markets, just like you have drops in bull markets. Okay, so part of that reason is if we look under the hood of what makes up this index. So we've got IT 30%, financials 13, healthcare 13, and consumer discretionary 11. So it's a big lot of IT. So if we go and look at them. Okay, so this is the XLK, or basically the IT index. So we'll go on a monthly chart. So look at that. That looks even better than the S&P 500. That's because it's tech. Look at that, it's beautiful. So that's history. So now, if we look at it, it's, what's that, since May 24. So for basically the last year, you could say it's been trading in a box. We've bounced out of the box a few times and we've been smacked on the head a few times. So if we go to a weekly chart, so to give us a bit more perspective on the box. So I reckon there's still we like the overall index. I still think there's a bounce in here. Bounce, come up to test the trend line. They call it the kiss and goodbye. So come up and have a kiss at 2:30 and then fall over. So that's where the bounce in the S&P 500 is going to come from. If we look at the financials, go to a monthly chart. Okay, again, another pillar of an uptrend channel. Actually went down and tested it, then went back up. So if we just go back to a weekly to get a shorter term outlook. Alright, so I reckon there's a 2% bounce in there. Come back up here, test the old highs. Because you can see this run here didn't conventionally break that high. You know, not like this one here where it broke that high and then off she went. So she's running out of puff, but there's still enough energy. Come up here and have a bounce. Then if we look at the healthcare sector, come back to a monthly. Okay, so that's even looking a bit worse. The first hint was this high. It didn't get anywhere near this uptrend channel. And we've now made lower lows. So this low here is lower than that low there. So I reckon there's no bounce there. It's just going to hang around here, and once it breaks, it's going to go. And then the last part of the mix is the consumer discretionary part. Okay, so we're testing previous highs, couldn't really break it, bit of a rounded top there. If we go to a weekly chart, okay, so very bullish move there out of the uptrend channel, but it's come back down. So I still reckon there's a nice 5% bounce, so probably up to 220, and then back down. So bringing that all back to the S&P. Where are we? Yep. Right, so based on what's under the hood, 4% bounce probably isn't out of the question. Yeah, so 4% bounce up here. And then now, just to complicate matters, because people don't usually talk about this, is the Aussie dollar, USD. Because in that IVV, it's not hedged, right? So us Aussies have had a bit of a steroid injection with our IVV investments, because as the Aussie dollar's come down against the US, it's enhanced our returns in IVV. So we've been blessed by a rising IVV S&P 500 share market and a lower Aussie dollar. But hello, Aussie dollar's testing support here. And it seems it's 4 months of 62 cents being supported. So if we have a bit of a rally in the Aussie dollar, then that's going to enhance those potential losses. So I still think there'll be a bounce in the S&P, and then it's going to fall over. And then if the Aussie dollar goes up at the same time, then that's going to magnify the loss. Because if we look at the dollar, this is the dollar index against all currencies. It doesn't look very good. So thank you, Trump. Trump's not really caring about the markets and the dollars. He's just trying to get America back and get rid of the reliance on Chinese cheap labour and get America pumping. He doesn't care about the stock market or the dollar, or even if there's a recession in America. I don't think he just needs to give it a big kick up the arse, and so it'll become a better kid later on, and then the share market will go. But right now we're in for a correction, and worse in Australia if the Aussie dollar goes up in terms of your US investments. And that goes the same as NDQ, but maybe that's in another video. But yeah, all US dollar investments in ETFs are at risk of a rising Aussie dollar too. All right then, that's it from me on this one. Thank you.
Never waste my time. You are I want. Neither of us want.